What's up, everybody? Friday, August 2nd. All right. Yesterday at 7:33 a.m. Eastern Time, I sent out an email to my subscribers saying that the sentiment survey, which comes out every Wednesday, I track the AAII weekly sentiment survey, put call ratio. The sentiment survey, which I've been talking about here on these videos, came in with a fairly big rise in bullish sentiment, a big drop in bearish sentiment, and again the neutrals are up. The neutrals have been up over the historical average since the beginning of this year. And that rise in bullish sentiment and a drop in bearish sentiment, I told people to expect some market correction, some downside. Now this was prior to Trump's announcement of the tariffs on China. This was at 7:33 a.m. Eastern Time. So we were ready for this pullback. And then you know what happened. The market was up yesterday and then it ended up down over 300 points. We are buying this. Let me just say, how many times do we have to see this setup? I mean, how many times, not myself, but how many times do you and everybody else have to see this same setup? The tariff threat, the trade war BS, all this stuff. Market sells off. It is a buying opportunity. At the end of the day, what has kept this economy going, and I will say this, that the tariffs have led to an increase in the U.S. trade deficit since the time that Trump has been threatening or imposing these tariffs, and that has been a subtraction from GDP. I mean, you see it in the quarterly numbers. I mean, that net exports, which is net exports minus imports, that has gotten bigger and bigger, and it has been a subtraction from GDP. So yes, there has been an effect, but even with that, we're still growing above 2%. All right. So the setup is the same every single time. We get these panicky, hysterical market sell-offs on these pronouncements by Trump, and it has been a beautiful buying. I talked about the guy the other day who doubled his money in 2 months, basically buying one of these sell-offs. All right. I had another guy today tell me the same exact thing, a subscriber. So we have this pullback. We're buying into this 29, 14, 15 area on the S&P we got down there today. I suspect we'll see a pretty high put-call ratio at the end of today, and I suspect we'll see much of that bullish sentiment purged out by the time we get next week's AAII weekly sentiment survey. Number one. Number two, Trump signed the budget deal which suspends the debt ceiling. So we are now back in business in terms of Treasury bond sales. They will resume next week, and we'll see what happens. I've been saying this now for months and months and months since the debt ceiling, that this has imposed an artificial impediment or blockage to the sale of treasuries at a time when the Fed was bringing reserve balances down. So you would have in one tier one asset being stripped away from the banks, and the banks were forced to buy treasuries to replace that tier one asset at a time when you had the debt ceiling, which made it so there were no new treasuries. So that went away. Both of those factors are gone now. So we'll see what happens. Now, I admit that when you look around the world, you see collapsing rates, even negative rates. Germany, the whole entire yield curve went negative. Japan's been negative. I said this a while back that it looks to me like central banks around the world are going full Japan. That's the term that I quoted, full Japan, in that, you know, Einstein's definition of insanity, they keep doing the same thing over and over again, expecting a different result each time. So they go negative rates, which is a tax on banks, which sucks away capital, and you have this vicious circle, and then they can't lend, and then these central bankers think it's a liquidity problem, so they dump more reserves onto the bank, which is then they need more capital for that. And so it's this vicious cycle that these morons don't seem to understand. Now, I cannot rule this out in the case of the Fed. In fact, this might be the dynamic now in play, and we shall see. But as you know, I've been saying this since basically the debt ceiling went into effect, that was creating an artificial squeeze in the bond market. So now my theory will be tested. And you know, I said that we will not go into a recession. Fiscal support is too high. And the inversion of the yield curve, when everybody was going crazy about that, remember? Everybody was going crazy about that. You had that guy, Greg Mannarino, a lot of you follow him. He put up that video saying, we have never seen this before, something terrible, horrible, just catastrophic is going to happen. Yeah, we made new highs in the market, just like I said. So now the theory is put to the test. We no longer have this blockage. Treasury sales will resume next week. We're going to see what's going to happen. If yields continue to collapse, then it's obviously the result of all these moronic central bankers going full Japan, and there's nothing we can do about it. It's just going to do that, and that is going to, I mean, that's just very, very negative for the global economy. Just the constant dump. I mean, you know something? Any person with a scientific mind would see when their theories are not borne out in the empirical evidence, when the thing that they are expecting to happen is not happening. And I'm not talking about over a week's time or a month's time or even a year's time. Over years and years and years of doing the same thing. If that is not, if their theories, if their expectations are not borne out in the empirical evidence, what is actually happening, you would think they would go back and re-examine those theories. But no, only in the profession, and I use that term very loosely, of economics, do these morons continue to do the same thing over and over again. This is why growth is so slow and so stagnant, and credit creation is so slow and so stagnant. These idiots just keep thinking it's a liquidity problem after they have dumped trillions, quadrillions, what am I saying, of reserves into banking systems throughout the world. It's really something to behold. And unfortunately, we are all, in some way or another, at a loss as a result of it. I'm not at a loss personally because I know how to make money off of it. If you know how to make money off of it, then you could sit back and still watch in kind of an incredulity how these idiots are left in charge. It's really amazing. It really is. So that's where we are. We're buying this dip, trade war, yada yada. I've seen this 100 times already. And I'll be back doing a video at some point. By the way, we're coming into next week, peak reserves. Peak reserves, if you know what that is, if you are a subscriber of mine, you know what that is, and you know what that means. You know what it portends. It's about knowledge, people. It's about understanding. This is gaming the system, but legally gaming the system. When you have the knowledge, when you have the understanding, when you have the correct information, when you know what to look at, and you know what the effects of these policies are going to be. Remember my gold position? So many of you laughed. I had people signing up. It took time, but look at it now. All right. Have a nice weekend, everybody. See you next week. Bye-bye.